Evening, guys. Appreciate you hopping on. Know this is much later than what I like to get videos out at, but wanted to at least push this out so that we can have people review it in the morning, whatever they like to do so. But before I get started, kind of what I'm going to cover is just some more clarity to my Sunday evening video, along with how it played out throughout the week, and into scenario 2 with the poor CPI headline. I'll kind of cover that briefly. There's a lot of things that need to be dug up within that. A little bit of the technical analysis in regards to macros on the 4-hour, how I mentioned the cushion room that we do have, and then what I'm looking at kind of on the other side of this trading range and steps going forward. So, as always, not a licensed financial advisor. I do hold my Series 7 and 63 along with my SIE, but no longer sponsored by a firm. Actively trading for about 6 years now, more of those being in the last 2 to 3 since I've been unsponsored or since I left the brokerage realm. So take what I say with a grain of salt. This is simply just education that I've picked up along the years, along with what I was taught on the desk. But this is a highly manipulated stock. So my approach to all this is just to increase my own personal probabilities and place my trades based on that. So anything that says here, just know that different risk managements, different approaches to the security. You could be holding shares, you could be holding options. So just like to clear the room on that before we hop into it. But this is, as always, kind of your weekly chart. So weekly candles here. Just kind of want to start off with this like I always do, just so you can see your trading channels. So when I say trading ranges, here's one range, 2 range, 3 range, and there are different ranges in between. So that'll come into play later on in this video, as we kind of get into more of the micro and things that I'm looking at. Weekly, this is your 200 SMA. I only have 3 years up right now. But this is your 200 SMA on the weekly chart. So just when I reference this, know that the kind of depth that's holding is just your simple moving average, along with your 50 EMA exponential moving average. Then you have your standard deviation bands right here, upper, lower, and then your standard deviation line. It plays a factor on the macro. I use that more on the micro. But on the weekly, that is something that I am looking at as well. Main thing is this 200 SMA. We did break it, go up and test the top of this trading range and this regression channel, and came back down. I kind of said this is a possibility, and this will make more sense when we get into the lower time frame here. But the good sign is that we're still holding above the 200 SMA on the weekly candle, and tested up that top range, came down and respected the bottom range this morning. I'll show you that here shortly. Even yesterday, I'll show you the different ranges you want to get into, but just want to show on the weekly there, that's a big cross. Then we'll kind of get into the daily. Awesome. Let me zoom in just a little bit. Primary focus is going to be over with where we're at, but I just wanted to hit on some similarities going into where we're at, because I did kind of reference this on Twitter and wanted to bring some light up into it as we get into these lower time frames. So just for perspective of what these regression channels kind of come off of, makes a little bit more sense on the daily candles. So let me just hop in and show you that real quick, just so when I show them on a micro, it makes sense of where they're coming from. So just 3 different regression channels. I honestly took this regression line and kind of built in channels above it, just with like more of a macro resistance based on this initial regression channel. So as we get into these lower time frames here, you'll see exactly where the significance was on a lot of these and why the crossovers can get extremely aggressive. And I don't have a bottom one in. I wanted to kind of show you this on the 34 run, because I wish I still had this line, and I could maybe add it, but just for the time's sake of the video, I don't want to make this another 40-minute long video. The setup that we currently have, and I know it's a bit early to kind of confirm this, or a lot of people are like, oh yeah, we've seen it before, blah blah blah. You'll notice here we test these ascending support lines that come off of pre-January, and we basically break through the trading ranges as we obviously fall down through them, because we're snapping some macro supports as well, but then on the upside we're breaking them. So you got your ascending support, your horizontal support. Those are kind of usually your strongest ones, both on the resistance side and support side. So these channels are just kind of channels we can find ourselves in, like trading ranges to the upside, and then your regression channels. So it kind of gives you all angles, gives you your ranges on the upticks, your potential slides on downticks, and then different levels to look at. I do use fibs periodically, but not super commonly. To be honest, it's good to have a reference point for like golden pockets and things like that. But I've found more success both on the desk and personally from kind of drawing in my own trend lines. It's just a skill set that I feel like I've kind of got down pretty well, and you'll see how much they're respected here. On the daily though, one thing I do want to highlight is we are getting that crossover with the standard deviation line and the 50 EMA. I wouldn't say it's quite confirmed, like we're just touching it right now, but there's a big reason why there was so much resistance on this line this morning, along with CPI and other stuff. But there is good things that came from this, and what I was kind of hitting on in my tweet, which we'll get into here shortly. But it's good we kind of confirmed the breakout above the 50 EMA into this new trading range. This is a level I'm going to want to hold, which I will kind of digest here shortly, right around 1470. I think it's 1470, 1468, 1470 range is where I'm looking to hold, but I'll obviously hit on that here shortly. One thing too on this candle, I use them some on the desk just for like technical analysis, and I still reference them, like candles and certain TAs kind of like second nature in a sense, to where like I know what it is, but at the same time one indicator doesn't just signify the direction, if that makes sense. Like just because one thing occurs doesn't mean that A plus B doesn't always equal C. So with this here, this is called an inside candle. So inside candles, or inside bar, we refer to as IB. An inside bar is a basically indication. The way that they have the definition just makes a lot more sense, so it's easier to read it off of this. But basically with the inside bar, what you want is you got your high and low of your previous day. So this previous day or previous candle, just if you're talking inside bars in general, previous candle, inside bar, this is called your MB, or like your mother bar, meaning this is what's indicative of this candle shape. So when you get an inside bar, what that means is that your high and your low are within the inside of your motherboard's high and low, and then you usually want the body of your candle to the right. Like let's say this trading range is inside of it, that's good. I'll show you some other examples here shortly. But your low is higher and your high is lower. So typically any standard trader, well not standard trader, but retail investor that's getting started, they're like, well, you got a higher low, but you also got a lower high. Like how can that be good? Well, with the inside bar, what this dictates is that you want your body of your candle to be inside the candle of your motherboard. That's preferable, not always needed, but it's just more bullish tendencies when that occurs. So this body is inside of the motherboard body, and we also got an inverted hammer candle. Um, so two major setups that are very indicative of certain things. So like an inverted hammer candle is basically found, it indicates like a bullish reversal or short-term downtrend reversal. It just depends on the time frame. Obviously, we're out on the daily, so it's going to hold more weight. But essentially, what it does is it usually occurs like after there's an oversold period of time when prices are like near their low of that period. Um, so the trend reversal basically shows you that an upside version of the hammer candle is what's to follow when these inverted candles occur. Sorry, I know I'm speaking a little bit slower on things. I'm very exhausted and got to be heading to sleep here soon. But I just wanted to point out these big ones here. So having an inside bar and an inverted hammer candle is very indicative of the selling kind of getting exhausted. So when these two line up, both an inside bar and an inverted candle, that's a pretty strong sign of continuation back to the upside. So it's reversing from a short-term downtrend, which is basically what we got today on the 4-hour, which I'll show you when we zoom in here. But we also got an inverted hammer candle on the daily. So those two setups are extremely good. Usually have strong tendencies on the follow through. But I'll get into the 4-hour here so that I can use any sort of brain power I got left to explain this without sounding like a robot. But the 4-hour is, 4 hours is very, probably the most intriguing part to this whole technical analysis right now. Obviously the weekly and the 1 day hold more weight, yes. But the 4-hour, you'll see the comparisons here shortly. Let me just take off this TTM scalper. The 4-hour is showing a lot for me, almost more than any other time frame in regards to what my main focus here is. So I mentioned trading ranges before, and that's what these channels represent, like the white lines ascending. These are your regression channels, and then your horizontal support and resistance lines. So let me zoom in real quick here, because I want to show you a comparison, but I also want to show you a further explanation of what I was talking about in my tweet earlier and the movement that I'm looking for. Yeah, this will be good here. Give me a second, I just gotta adjust this over here. Okay, that's better. So I'd kind of just first off want you to take a mental snapshot of this style of movement. Usually anytime you're carving out bottoms on a stock that's not manipulated, and just in general, like you're gonna see this kind of choppiness, but if you form these channels, and I mean I literally have had these drawn in for a while now, you'll notice that it's catching an uptrend progressively. So a lot of times people were saying, oh, we need a lower low to signify the spring. The dynamic of this is just a different beast, to where it's showing you that it's respecting like major uptrends from previous, regardless of market conditions. Like obviously we got yanked down in certain areas because of the market. There's no arguing that, but you can't argue the channels that this is going into the upside and now continuing to break out of them. So as we get into this, I mentioned the stair step until we hit our elevator. This was something I really hit on big back pre-34 run, if you had been following me at the time. Because essentially, like I said, when you're flipping out of a downtrend or trying to reverse out of an oversold position, you're going to kind of get this pop. In a natural stock, this would kind of be where shorts and longs are also testing the waters. You kind of get more of your VWAPs where you got those spikes up, spikes down. This is volume weighted average price. is basically what VWAPing is, but then there's also TWAPing, time weighted average price. TWAPing is pretty common on the market. It's just basically bulls or bears testing the waters, and then timing their orders as they go through at certain points. So you can kind of see this occurring here as we're kind of carving out bottoms. Obviously we're down at 970 and below, but I really like this kind of zigzag trend, and it may be something that you are familiar with if you've been paying attention to recent trends on something different than the 5-minute or the 15-minute. So big thing that I really enjoy about this 4-hour is that we're holding this uptrend. We got this crossover, and when it occurred, it was a little bit delayed on the 4-hour, but the confirmation was here, and we held this trend. These regression channels can get a bit aggressive if the market's not acting favorable, because this one basically, not only are you hitting a resistance on the ascending support, or support lines, I guess. You're hitting a resistance here, you're hitting a regression channel, and you're hitting a horizontal. So it wasn't super surprising that we got that dip down. But something like this, catching off a 200 SMA and forming this kind of box formation, it's extremely bullish to see, and especially with the continuation of this breakout. So this zone right here, here's your stairs. You kind of go up and then test some high points, and then you back test, usually to about your breakout zone. So if you notice the back test, if I'm just holding this line here, back test is about here, here, here. It goes back to previous tests sometimes when that occurs, because you got the retest here, bounced up, tested this trading range, came back down, then you got your deep spring, or not spring, deep retrace down, basically to where your breakout zone was on the body of this 4-hour. If you go to the side here, it's also where this was rejected and tried to break out of it. And it even goes back maybe a little bit further. Yeah, you might say potentially down to here. But what I like about these deep candles is like the retrace always has a wick on it, followed by continuation to the upside. So we came off of this trading zone, broke this trading zone, a horizontal, while breaking a regression channel, tested almost the top of this zone, came back down, and then shot up for a retest, like a true test, multiple 2-4-hour candles, and then kind of just kept pressing it until it fully broke. So what doesn't concern me with this here is that, one, we haven't been in this trading channel or trading range basically since the very end of May, and the setup leading into the end of May was much more staggered. You got a little bit of a stair-step action here, but this is why I say you don't want these massive candles up in a day. Like, yes, we will get those, but to break these regression channels, you'll notice it kind of just shot right through these, but the volume wasn't anything super remarkable, to be honest. So you don't want to increase that high, because all it does is just shoot your RSI straight up, and then it makes it much easier for them to yank it off the top there. But as for current positioning, I mentioned this before, is that I wouldn't have mind, like yesterday, I was like, I wouldn't mind consolidation in this 1580, 1575 range, just to fill up some VPR on the 4-hour, and it's also in a new trading range. Like, when this occurs, it's not uncommon for you to go back and retest previous zones, previous breakouts, before we kind of continue that uptrend up. So basically what I'm saying with this is all this kind of consolidation, I know it doesn't look the best on micro charts, kind of signifies that it's respecting the trading range. The market's kind of agreeing to it. Obviously supply and demand are pretty skewed in this aspect. But with these 4-hour candles, both testing the top of the trading range and almost the bottom. The invert of these two, it's very similar to an inside bar, arguably, even on the 4 hour. The only thing is obviously your high is higher than the previous high, but your low is lower than the previous low. So yes, we came down in after hours. I don't pay attention too much to that. It's just them pulling the bid on little volume. It's much easier with no market makers to perceive that. Going into tomorrow, though, with that CPI data, a negative 3% day on AMC doesn't. Like I told you guys that this could be a potential possibility. Just because if it came in poor, we're going to struggle to break this line or the 1640 just because of overall fear and volatility within the market. They were going to use it to hit the bid and add into different positions just because of all the ups and downs on SPY and everywhere else. So consolidation or kind of trading within this whole channel here is extremely good to me. Doesn't bring anything of concern quite yet. We did fall into the standard deviation band on the 4 hour. We've done this before with continuation up, kind of like these runs here, fell beneath and then shot back through. Main thing is what I'm looking for into tomorrow. It's potentially possible that we do go test this 1480, 1475 zone. This is the big one that I'd like to not break is 1470. If you look over, and I was just showing you guys this earlier. Here we go. Sorry about that. We'll zoom back further. And I'll most likely do a live session tomorrow. I know that a lot of this is a bit dragged out with an explanation. Honestly, just trying to stay focused. But here's your 1370 mark and the significance of it. If you look to the left there, it is catching a few wicks, but you'll notice it kind of caught tops here, and what resulted in kind of drop-offs. If you go even further over 1470 to the left, it's catching this one, some supports over here. So basically what I'm saying is sub 1470, we could see some near-term downtrends. Nothing too extreme. I think 1420 range, 1415 area is going to catch if that does happen. I just like to give that as a possibility. Most likely 1420 range is what would catch if 1470 was broken. But I don't forecast that being the case. This uptrend has been pretty solidified. We're into a new zone, so I think we could potentially test the 1480, 1475 range in the pre-market tomorrow. I'm hoping to see some relief broad market-wise, just as we head into the new day with that CPI data. I'll kind of hit on that more tomorrow when my brain's fully awake and operating. But I do want to just give you some scenarios. So into tomorrow, likely scenario, potentially in the morning off a pre-market, they could try and push it down to the 1480s, 1475s. But I think we should get a decent rotation in volume. Like I said, those daily candle setups with the inside bar and the inverted hammer have me believing that the selling is pretty exhausted near term. Meaning, if we do go down and test out this ascending support line, I think we're going to push up much quicker than what people expect. I don't know if we're going to test this regression channel tomorrow or not. But ideally, I'd like to kind of carve out this bottom, just get the full retest of the breakout zone in, just early in pre-market, and then kind of work our way back up, maybe with some volatility and a little bit more consolidation up towards the top of this trading range. We've seen a lot of it. I don't want to ask for anything too much, but there is a possibility if we do go down to test this, and if markets are green, that we can come back up and test the $16 range. It'd be extremely nice if we did that and then kind of consolidated up in this region, kind of like what occurred here. Just get some true momentum build up, because it's gonna be tough to break both this regression channel and the 1640 mark, 1635 roughly. So that's more so what I want to see, is just a carve up and then a consolidation in maybe 1550 to 16 range. If markets are really ripping, I think we're going to move pretty dang quick. I just don't want to get overly leveraged to one side. I mean, when I say that, I mean biases wise, because I do want to make sure that this is held and not get caught kind of saying to people, hey, everything's good, when we could fall out of here and test the 1420 range. So I just like to, I'm cautiously optimistic. I think that's a pretty light way to put it. I'm just being patient and trading these ranges, because the main thing I'm looking for is a break of the 1640 line, and my zone right now is 1640 to about 22.5. Like I'm playing that on a near-term momentum flip. If we break 22.5, there'll be more to follow, much more. But I just want to give people perspective on the momentum shift right now, and then as we kind of get up towards that 20 to 25 range, we'll give more clarity to it. But just want to pop on, explain a few basic things, along with similarities to the 34 run that I mentioned on my tweet. Here's your 34 run, kind of got your same rectangle box off of a horizontal support, came up, retested, came all the way up, retested. So just for perspective, we went from 1569 down to 1467 in one day. Yeah. So I mean, it's about the equivalent to exactly what we did the past 2 days. Like we got that big retest big test at 1615, came down, came up, and almost tested the same region. It was about 1594, almost 16, I believe, today. And we came all the way down to 15, sub 15 and after hours. Like these movements are not uncommon. So like when that occurs, look what happened the next day. We came back above the standard deviation line, even though we broke down beneath it, and then continued this uptrend. Third test on the 4 hour got us through, came up, retested, big shot up to 1640, came all the way back down to 1527, and then continued up. So moral of the story is I'm not concerned with today's movement. It was forecasted off a bad CPI. Headlines, again, I'll hit on that more tomorrow in detail. I think there's a lot of good numbers within that information in regards to potential peak recession, not even peak inflation, just meaning like we could be past peak inflation and working towards the recession phase, which a lot of us are feeling with the jobs and things like that. There's a bunch of different things with the yields. I can't explain it all right now, but just wanted to give some clarity to that I will be live streaming tomorrow and hopping on here. Appreciate you hopping on, kind of listening to my ramble. That's just what I'm looking at right now in regards to things, and then I'll give more clarity to what's to come after tomorrow. So good RSI cool off, massive increase continuing on the 4 hour. This is what you want to see, your inversion or convergence of OBV and RSI. We don't want to see the price action continue to follow, but if OBV rising as RSI is dropping, that's what we want near term. We want RSI to cool off so we can continue this uptrend up. But appreciate you hopping on. Give me a like and subscribe. Just kind of helps with the YouTube algorithm. Sorry for a lot of that jambling there. I know my head's a little bit little foggy, but appreciate all you guys kind of giving good feedback, things I can work on, and different ways to help the community. I do have a lot of plans in store coming up. I just haven't got a chance to kind of release them all or get them all into a format to where it's um, shareable, if that makes sense. So just working out some fine print stuff, just making sure everything is clean and crisp, and just from the same way I learned things as well. So like I said, leave a like and subscribe. I'll leave Rico's Discord link in the bottom, so you guys can hop in and catch some of our live streams that we do on a daily basis. And I will also leave my Twitter bio so that you can find me there. I like to update a lot of my viewers within that realm as well. So have a great night. Catch you early tomorrow, and let's have a good session.